Good morning, traders, and welcome to BCI's morning market analysis. Today, we're tracking key movements across the US dollar, commodities, and major currency pairs as shifting fundamentals and technical structures shape the trading landscape. Let's dive straight into the action. First up, let's have a look at the DXY. The US dollar index extended its decline for a third consecutive session on Wednesday, dropping to a more than 2 week low near 99.39 as fiscal concerns come back into focus. Market sentiment took a hit after President Trump failed to gain Republican support for his tax reform bill. That, coupled with Moody's downgrade of the US credit rating, has intensified doubts about long-term fiscal stability. Comments from Fed officials add fuel to the fire. St. Louis Fed president highlighted weakness in the labor market, while Cleveland's Beth Hammock warned of potential stagflation. From a technical perspective, the dollar index has fallen below 100.13 and the psychological level of 100, with resistance now seen at 101.6 and 101.65. The RSI is hovering near 42, suggesting bearish control with room for further downside. Watch for key support around 99.17 and 99. Break below these levels could expose the lows of 97.91 and 97.73. Next, let's talk a bit about crude oil. Prices surged during the Asian session, reaching a 1 month high of $64 after reports emerged that Israel may be preparing to target Iran's nuclear facilities. This news, based on US intelligence, has injected fresh geopolitical risk into the markets. API data showed a 2.499 million barrel inventory build, down from previous week's increase, which helped ease oversupply concerns. Moody's downgrade of the US also raised questions about demand stability in the world's largest oil consumer. Technically, crude has broken above the key $60 level and the 20-day SMA at 60.67, closing three straight bullish candles. Momentum remains strong with a MACD golden cross in place. Resistance lies at 64.71 with potential for further gains towards 65.61. However, a break below 61.09 or $61 would suggest a near-term pullback towards the $60 mark. Spot gold opened above $3,300 and is now holding near $3,310, supported by both geopolitical uncertainty and a weakening US dollar. Gold remains in favor as safe haven amid growing concerns over a possible Israeli strike on Iran and the continued Russia-Ukraine conflict. Moody's downgrade of the US debt only reinforces investor appetite for safety. Technically, gold has broken out of a potential head and shoulder pattern and is now trending higher, forming consistent higher highs and lows. If the momentum continues, we could see a move towards $33.24, followed by $33.50 and possibly $3,400. Key downside levels include $32.50 and the 50-day SMA at 31.84.5. Lastly, let's have a look at the Australian dollar, which climbed to 64.58 on Wednesday, mainly on the back of a softer US dollar. Still, domestic challenges persist. The RBA's latest rate cut, combined with signals of further economic softness and political instability following the collapse of the opposition coalition, are weighing on sentiment. Technically, the Australian dollar is trading above the 20-day SMA at 64.23, while the RSI remains above 50, both pointing to a continued bullish momentum. Resistance is seen at 64.87, and a breakout above 65 cents could pave the way towards 65.15. Initial support is around 64 cents and followed by 63.54. Well, that's all for today's morning market analysis. We'll be keeping a close eye on the upcoming developments, especially from the G7 Finance Ministers Summit and the evolving geopolitical headlines. Thanks for tuning in to BCR's morning market analysis. Trade smart, stay informed, and we'll catch you in the next session.